Hello everyone, welcome back to my YouTube channel. Today's update focuses on the Vietnamese Dong, one of the most closely watched currencies among global currency investors and foreign exchange followers. Over the past several weeks, new economic reports, inflation data, foreign investment trends, and exchange rate forecasts have generated significant discussion about the future direction of Vietnam's currency. In today's report, we will examine the latest developments affecting the Vietnamese Dong, what economic experts are saying, how recent events could influence exchange rates, and what investors should watch moving forward. Vietnam continues to attract attention as one of Southeast Asia's fastest-growing economies. Despite global economic uncertainty, the country remains a major manufacturing hub and export powerhouse. International companies continue expanding operations in Vietnam, attracted by its skilled workforce, competitive costs, and strategic location within Asia. These factors have helped maintain strong long-term confidence in the country's economic outlook. One of the biggest stories impacting the Vietnamese Dong this week is the release of new inflation data. According to recent economic reports, Vietnam's inflation rate increased during May 2026, reaching levels higher than those recorded in previous months. Rising fuel costs and global supply chain pressures have contributed to higher consumer prices across several sectors of the economy. Analysts note that inflation remains one of the most important indicators for currency stability because central banks often adjust monetary policy in response to inflationary pressures. At the same time, Vietnam's trade balance has become another major focus for economists. Recent data indicates that the country's trade deficit expanded as imports increased and external economic conditions became more challenging. Trade performance plays a crucial role in exchange rate dynamics because export earnings help support demand for a country's currency. When trade balances weaken, additional pressure can emerge on exchange rates. However, despite these challenges, many financial institutions remain relatively optimistic about the medium-term outlook for the Vietnamese Dong. Several analysts believe the currency could experience greater stability throughout 2026 compared with previous periods of heightened volatility. Forecasts released by market experts suggest that exchange rate movements may remain manageable even as global financial markets continue adjusting to changing economic conditions. Another important factor supporting confidence in Vietnam's economy is the continued expectation of foreign capital inflows. Recent reports indicate that international investors are increasingly viewing Vietnam as an attractive destination due to structural reforms, expanding industrial capacity, and hopes for further financial market development. Strong foreign investment can provide additional support for economic growth while helping stabilize currency markets over time. The manufacturing sector remains one of Vietnam's strongest economic engines. Global companies continue diversifying supply chains and increasing production capacity within the country. This trend has helped Vietnam strengthen its position as a major exporter of electronics, machinery, textiles, and consumer goods. As exports grow, demand for the Vietnamese Dong can receive indirect support through increased international trade activity. Currency investors often ask whether the Vietnamese Dong is approaching a major revaluation event. Based on current publicly available economic data, there has been no official announcement indicating a dramatic currency revaluation. Instead, economists generally expect gradual adjustments influenced by inflation, interest rates, international trade flows, and global market conditions. The consensus among financial institutions remains focused on steady economic management rather than sudden currency changes. Another development influencing the Dong is the broader regional currency environment. Across Southeast Asia, several currencies have experienced fluctuations as central banks respond differently to inflation, growth concerns, and international capital flows. These varying policy approaches have contributed to changing exchange rate relationships throughout the region. Vietnam's policymakers continue monitoring these developments carefully to maintain financial stability and support economic growth. Investors are also watching the actions of the State Bank of Vietnam. The central bank plays a key role in managing monetary policy, maintaining financial stability, and helping guide exchange rate expectations. Although policymakers face challenges associated with inflation and external economic pressures, Vietnam has historically demonstrated a willingness to implement measures designed to support economic stability when necessary. Recent forecasts from financial institutions suggest that the USD VND exchange rate could remain within expected ranges over the coming quarters. While short-term fluctuations are always possible, analysts generally expect gradual movements rather than dramatic shifts. This outlook reflects expectations that Vietnam's economic fundamentals will continue providing support for the broader financial system. The country's long-term growth story remains one of the strongest reasons investors continue following developments in Vietnam. Population growth, urbanization, expanding consumer spending, infrastructure investment, and increasing foreign direct investment all contribute to positive economic expectations. These factors may not guarantee currency appreciation, but they support the broader economic framework that influences long-term exchange rate trends. For Vietnamese Dong holders, the latest developments present both opportunities and challenges. On one hand, Vietnam continues attracting investment and maintaining strong economic growth relative to many countries around the world. On the other hand, inflation pressures, trade imbalances, and global economic uncertainty remain important risks that must be monitored carefully. Successful currency analysis requires balancing both positive and negative factors rather than focusing on a single economic indicator. Market participants should also remember that currency values are influenced by numerous interconnected variables. Interest rate decisions, geopolitical developments, commodity prices, foreign investment trends, trade performance, inflation data, and global risk sentiment can all affect exchange rates. As a result, predicting short-term currencies movements with complete certainty is impossible, even for experienced financial institutions. One positive sign for Vietnam is that many international organizations and financial analysts continue describing the country's economic prospects as favorable, compared with many emerging market peers. Continued industrial development and foreign investment expansion provide important foundations for future growth. These strengths help explain why Vietnam remains a country closely watched by global investors and multinational corporations. The latest economic reports suggest that policymakers are working to balance growth objectives with financial stability. Maintaining this balance is especially important during periods of global uncertainty, when external shocks can quickly influence domestic economic conditions. The ability to navigate these challenges successfully could play a major role in determining the future direction of the Vietnamese Dong. Looking ahead, investors should pay close attention to upcoming inflation reports, central bank decisions, export data, foreign investment announcements, and developments in global financial markets. These indicators will likely provide important clues regarding future exchange rate trends and broader economic performance. As of 2026, the Vietnamese Dong remains one of the lower valued currencies in nominal exchange rate terms against the US dollar. However, economists frequently emphasize that a currency's numerical exchange rate alone does not determine the strength of an economy. Economic productivity, growth potential, investment flows, and overall financial stability often provide a more complete picture of a country's economic health. For those following Vietnamese Dong news closely, the key takeaway from today's update is that Vietnam continues showing signs of economic resilience despite inflation concerns and external challenges. While recent data highlights areas that require careful monitoring, many analysts remain optimistic about the country's long-term economic trajectory. Investors should continue focusing on verified economic information, official policy announcements, and credible financial forecasts rather than speculation or unconfirmed rumors. That brings us to the end of today's Vietnamese Dong update. If you enjoyed this report and want more updates on the Vietnamese Dong, Iraqi Dinar, global currencies, and international financial news, be sure to subscribe to the channel, turn on notifications, and leave your thoughts in the comments below. Thank you for watching, and I will see you in the next update.